There's a lot of talk saying we're either at the beginning, the middle, or the end of an AI bubble. One thing they mostly seem to agree on is that there is a bubble. But what if bubbles don't exist? Is there any evidence besides the highs and lows of the stock market and shady business dealings of tech companies? Let's find out. If we ignore all the talk about the AI bubble and signs of a bubble as though they can actually tell with absolute certainty, with arguments to substantiate their claims such as it's a bubble but no one knows whether it's the beginning or the end, might just be starting or could continue for 10 more years. It's not a good start. First, we need to talk about Fama. He says bubbles don't exist. A bubble denier, even going so far as cancelling his subscription to The Economist because they mentioned the word bubble too much. His research includes the efficient market hypothesis. You might be wondering what exactly that is.
A very simple statement that prices reflect all available information.
Richard Thaler disagrees with the efficient market hypothesis. He's a bubble believer. Fama's response is,
It's a model. It's not completely true. No models are completely true.
Fama argues markets are efficient, taking into account all available information and risk. The occurrence of economic bubbles could potentially undo Fama's theory by implying the market is inefficient. However, some have argued that if bubbles do exist, they are the exception, not the rule, and that the market is likely efficient. In an interview between Fama and Thaler, it's discussed that bubbles, if they do exist, are very hard to test and define. Early in the discussion, Thaler concedes that efficient market hypothesis is useful in financial research, but stresses if policymakers take the theory literally, thinking bubbles don't exist, that could have consequences. This next part I think is pretty interesting.
Fama famously does not allow the use of the word bubbles, but I'm going to use it. Do bubbles exist? How do we define bubbles?
Well, I think it's hard to say. I'm going to present two examples.
This is the first example Thaler presents. This graph shows house prices as Thaler explains.
Depending on which measure you use, they go up a lot or they go up really a lot. And then they go back down after the financial crisis.
But this doesn't convince Fama because over time the graph returns to its peak.
So what's the bubble? The down, the up, the subsequent down?
Well, okay. So once again, we're in agreement, which is that studying data like this, it's impossible to know for sure.
When it comes to measuring bubbles, if they do exist, the discussion continues about how you can identify bubbles.
For example, for bubbles, I want a systematic way of identifying them. In my view, it's a simple proposition. You have to be able to predict that there is some ending to it. And all the tests that people have done trying to do that, they can't do it. So statistically, people have not come up with ways of identifying bubbles. I think that there's a lot of identification of bubbles based on 20/20 hindsight. And it's very easy to do it in that situation.
Then how should we define a bubble if they do exist?
I would say bubbles are when prices exceed a rational valuation of the securities being traded.
But when it comes to testing that in the case of real estate, Thaler says,
we only have a suspicion and we can't prove it.
in regards to the dot-com crash that plenty use as an example of a bubble, this is what Thaler had to say.
In Gene's honor, I won't refer to it as a bubble. Whether that was a misallocation of resources. And
On hindsight, it was. On foresight, not necessarily.
It was.
If we jump a little further into the discussion, Thaler continues with,
I'm not saying we can recognize them when they're happening, although I'm working on that. But I do think that we can have a pretty good hunch, and that solving that, a bubble detection committee would be highly useful.
Since we're yet to form that bubble detection committee, besides some internet deemed shady behavior on behalf of tech companies, and the reality that AI might not live up to expectations, although it is fascinating, the real takeaway here is to not get caught up in bubble mania. I'll let you decide whether you're a bubble believer or a bubble denier. But looking at peaks and falls on a graph is not evidence of a bubble, even if they do exist. Many articles or commentary never mention that there could be questions of whether bubbles could even be proven to exist. Bubbles may exist, but if they do, they're not so easy to identify in reality. There is plenty of hearsay when it comes to bubbles. For now, I suggest watching the interview if you're interested in a longer discussion on whether the market is efficient and rational behavior. It is a great discussion with rather agreeable disagreements. See you next time.
Some bubble time.
Bye. 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 Helicopter.